Welcome back to the channel. If you're new here, this is Options Over Ordinary. In the background, you might hear some thunder and lightning, which reflects a bit of a gloomy week. Although if you've been paying attention, midweek was even worse. But no fear, I'm going to bring some sunshine with a trade that I executed this week on CrowdStrike. In this video, we'll do a throwback to how we looked at the trade and the parameters, including the delta strike price and some of the news in the market, back on Monday, July 22nd, and then we'll fast forward to the performance of today on July 26th. So without further ado, let's go ahead and take a look back in time on where the market was on the morning of July 22nd. After last week's tumultuous time for CrowdStrike, I wanted to take a closer look at this particular single name. Now, normally we like to stick to ETFs and not do single name trading, but when you see an opportunity, sometimes the iron is hot and you need to strike. I'm looking at CrowdStrike for the last 6 months here. You can see on the filter. 6 months ago, it was trading around 300, 298. That was January 22nd. Fast forward to today, and it's trading at about 272.39. Now, it has been up and down within the range. You can see if we take a look at the last 5 days, Crowd started falling a bit, right? The high of 377, and it fell throughout the week with, of course, that global deployment that became problematic last Thursday night into Friday morning. Market opened Friday down significantly, and today it continues to fall. So another great option, single name to do a put option on. It's down 10.68%. It was down over 11% earlier. Let's go ahead and look at the chain and see what's available. So loading the chain, you can see that again, Crowd is at 271.64. I'm using Fidelity, and I'm just using the online interface, not the Active Trader Pro platform, although I do like that platform. So looking here, we have our strategy calls and puts. Strikes that are available, you can do 10, 20. I like to look at all strikes. You can also filter on volume as well as this. And then along the bottom, we have our expiration dates. I like to do weekly options. So I'm looking at the July 26th expiration date. You'll notice over to the right, there's this triangle with an E. This indicates earnings. So their earnings are expected on 8/28. We're pretty far away from that, so there should be no impact to earnings on this week's trading. We don't have any position in Crowd, so I'm only looking to do a put. So I'm going to go ahead and filter on put and then hit apply. Again, I generally use the wheel strategy, so I'm looking to do a good put on Crowd. Now with it trading, it just came down again at 270.69. This is about where it is from a strike price and market price. When we do our options trading, we primarily focus on the delta column. This indicates the percentage or the probability that the market is going to reach that strike price. Now, our comfort level is typically around a delta of 20 or less. Really depends on the premium. In this case, I feel like Crowd has lost a lot of ground, and I might even be willing to do a delta of 25 for this week. Now that could be risky, so it's all about what your risk appetite is. I'm going to look around 250 and 255. One thing to note is if you're not sure and you'd be more comfortable with a position at, for example, 250, 250 right in the middle, what you can do is do, and if you're willing to do two options, you could do one put at 250 and one at 255. Now, for the purpose of this, I'm going to go ahead and go with a strike price on the put of 255. If I click in here to do a trade, you'll see that this is the trading screen. So a couple of things you want to verify. One, we're trading CrowdStrike. So this tells you the current price. This tells you the symbol that you're trading on. Two, we are selling. So we are selling to open. If you wanted to purchase a put option, you would do buy. In this case, we are writing it or selling it, so we're going to do sell to open. If you had an existing position, you could either do buy to close or sell to close, depending on if you're writing it or purchasing it. So we will do sell to open. I'm going to do a quantity of 1. Again, we're doing a put here. Expiration date, we're doing July 26. You could go further out. Again, there's a nice indicator on earnings. We're going to go ahead and stick with July 26, and we have a strike price of $255. Now over to the right, there's important information on bid and ask. So our bid is 410, ask is 435, which means our midpoint is around 4.225. This indicates what you could get if you were to go into the market. Now, speaking of going into the market, you have 2 options when you go ahead and trade. You can do market or limit, and these are 2 basic options. Market means you'll accept whatever the going price in the market is. Limit means that you will set a floor to what you're willing to accept. So with a midpoint of 4.375, I would probably do my limit order at about 435. Now, because there's 100 shares per 1 contract, the proceeds that you can expect are the premium price times 100. So 4.35 times 100 is $435. Fidelity charges a processing or order fee of 65 cents per contract. This means it's 435 minus the 65 cents. We're expecting to yield proceeds of $434.35. Now, if you're comfortable with this particular option, you can go ahead and do preview order. And a couple of things to notice. If you're comfortable, you could place it. On this screen, I would recommend just reconfirming. I have seen some glitches, especially when doing online trading. So you want to make sure, again, we're selling to open, check. Our quantity is 1, correct. Symbol, we're trading with an expiration date of July 26, 2024, strike price of $255, and this is in fact a put. And then we have our limit and our limit price. Now, you may have noticed that when I came into this screen, the CrowdStrike price updated, which means I'll probably get a higher price and premium. Now, if I'm comfortable, I can go ahead and place the order. I'm kind of curious, though, how it's moving. So I'm going to go to edit, and I can see that it looks to be coming down a bit. So my new midpoint on this particular trade is 480. Let's go ahead and update this. Now, again, I am doing a limit, so if it moves up or down, it could, in fact, make it so that the order won't close. Let me go ahead and do a preview. And I feel fairly comfortable with this. But if I wasn't, I could come back up to the option chain. It'll open up a new screen so I can see how it's performing and see what my new deltas are. So let me go ahead and put it back to puts because I don't have any crowd shares. So this is a put, not a call. And if I come back down, it's trading at around 268. Now my deltas have moved. I don't know if I'm comfortable with the 28 delta, but at 22 delta, I feel fairly comfortable with. Fast forwarding a bit here, I ended up executing a put with a strike of 250, 1 contract. And when I placed the order, it was showing proceeds of around $4 a share. However, upon filling the order, I got much better pricing and ended up receiving $4.17 per share. I don't recommend trying to time the market, but we'll certainly take additional proceeds. Also, a good reason to use limit orders instead of market. In the event that the market moved against me, I would have received less than expected. Fast forward to real time today. On Friday, July 26, the market has closed and CrowdStrike settled at 256.16. This means that the put I sold with a strike price of 250 has expired worthless, so I get to keep the premium without having any shares assigned to me. On another note, I ended up executing a second trade of a put at 250 and a third CrowdStrike put that I sold at $255. Those other two trades were in my retirement account. Great news, both expired worthless. Although I was very nervous midweek when Crowd took a dip. If I look at the chart here and I go to the last 5 days, you can see there were times where it fell quite considerably under that 255 strike price that I had in my retirement account, but never quite hit below the 250 mark. So great news there. Thrilled to keep the premium and not have the shares. On to trade another day. Now let's take a look at the overall trading result. Trading Crowd this week at one contract with 5 days until expiration, at a strike price of $250, we received a premium of $4.17. This resulted in total proceeds after fees of $416.30. The amount pledged, or the amount that I would have had to pay for the shares had they been assigned, was $25,000 and is calculated by the strike price of $250 times 100 shares. As a reminder, each contract is equivalent to 100 shares. The percentage returned is the total proceeds of $416.30 divided by the total amount pledged of $25,000. This resulted in a fantastic weekly return of 1.6652%, a very conservative delta in the low 20s. If we were to annualize this return, it would equate to 86.59%. If you've enjoyed today's video and would like to see more content, please don't forget to like or subscribe. Can't wait to continue our journey and take you along on future trading. Thanks everyone, happy trading!